well, I guess for our viewers who might not be as familiar, who is Segantii? Let's start with that background.
Segantii is a firm that was founded in 2007 by a trader called Simon Sadler. Before founding the firm, he worked for firms including Dresner, HSBC, and Deutsche Bank. Unlike other Asia hedge funds who typically buy stocks and hold them for fundamental reasons, Segantii is more trading-oriented firms, particularly known for its willingness to participate on a large scale in equity capital markets deals. At the peak, it managed just about $6 billion in 2021. Now it oversees about $4.8 billion.
Okay, he was known as sort of the block trade king in this region. Can you just explain a little bit more about these block trades?
Block trades are actually, it's a loosely defined idea involving somebody unlocking a large block of shares in listed companies. But in private transactions, it could be the company selling new shares. It could be a shareholder, corporate insider selling shares, or it could be a large institution. So the tricky thing about block trades is oftentimes, the price-sensitive information that's involved, how to safeguard that information.
Yeah, and usually it's obviously not a good thing, but how is information shared before a block trade? It's obviously problematic, and what is the SFC? What are regulators doing about it too?
Sure. Oftentimes, the banks involved, or even the banks anticipating a deal, would go to a certain group of investors trying to gauge their interest in the pending deal. And it could be a hypothetical deal at that point of time. Usually they are not allowed to share detailed deal information until that investor is taken across the wall, which means signing an official pledge not to act on the insider information. But oftentimes, even before you get to that point, they have to share certain information with hedge funds or other investors to entice them to participate in the deal and be taken across the wall. And that's where the danger lies, because oftentimes the regular participant in this market, like the banks, have a calendar of the lockups that are ending and who are the potential sellers. So the little information that the banks share can help them guess who is the selling shareholder, how many shares are going to be shared, and that's when they can actually act on that information. And the SFC is trying to tighten the so-called rules on market sounding by bringing this kind of information sharing on recorded channels and demanding that investment banks keep records of such information sharing.
We've talked about how this is quite a high-profile case here in Hong Kong. What do we know about the process involved? Is this going to be quite drawn out?
Yes. So the only other case that I can remember involving a non-corporate insider was the criminal conviction of a former Morgan Stanley managing director many years ago. He was initially, the initial SFC announcement was in 2007. He was initially sentenced in 2009, as far as I remember. He finally, SFC won on appeal in 2012.